And then we decided to sue the government. It was a huge decision because from a pattern perspective, we talked to board and it's just well, from a pattern perspective, it just feels like a horrible idea. People don't, startup at this stage doesn't usually sue any government or anyone. And then two is any company at any stage doesn't sue their own regulator. That's just a bad idea.
Hello and welcome to First Money In, a show focused on now extraordinary founders and their first time ever raising venture capital. My name is Nicole Wishoff, and I am thrilled to bring you our latest episode. Today we welcome Tarek Mansour, co-founder and CEO of Kalshi. Kalshi is the only legal and largest prediction market in the US, where you can make money by predicting events. It's like trading on stock, but you're predicting things that you know about. Many of you have probably heard of Kalshi for the first time ever during the presidential election. Since launch in 2021, Kalshi has raised nearly $100 million from very notable investors like Sequoia, Henry Kravitz, Schwab, and more. Join us as we learn more about the founding of Kalshi, building an initially illegal product, and his tips to founders building companies today. Tarek, thank you so much for joining us. We are super excited to hear the story of Kalshi, as this has been both an incredible year and even past 2 months for you guys. I want to go all the way back, though, to 2018 when you decided to found the business with your co-founder. I believe you were both working together at Citadel as financial analysts. So is this where you first met, and where did this idea come from?
Yeah, so we actually first met at MIT. So we both went to MIT. I mean, I was born in California, but I was kind of international because I grew up in Lebanon and Luana grew up in Brazil. The way I would describe the idea coming, so I really like math. I really like CS. Both of us were not sort of this sort of entrepreneurial type that was trying to think about products. And, I was kind of at college, I had this sort of entrepreneur persona. They were trying to do a bunch of things to build startups. That was not us. We're much more theoretical. I was pretty into trading. I worked at Goldman, Citadel, a few prop shops. It's one of those examples where the idea pulled us into building the company. It just kind of pulled us into doing it rather than we wanted to build a company and we found something. So I was at Goldman in 2016. And I always tell the story, but the thing that was really striking and it was really unusual, most of the asks that we're getting on the desk was actually taking a position, taking a bet or taking a hedge on Brexit or the Trump election or other things like climate, disasters, if there was going to be some sort of bill being passed, events, questions about the future, what is going to happen, and I want to get financial exposure to it. And then what we would do is we'd structure bundles of stuff that hopefully correlates with that event quite well. But one, it didn't coordinate quite well. And two, it would charge really ridiculous premiums and spreads and fees on top of this stuff. And so it's okay, we have a financial market to price equities. We have one for credit, bonds. We have one for commodities, oil, futures, metals, etc. And we have one for currencies, FX. But we don't really have one that captures sort of any questions about the future, which I felt to me is really counterintuitive. It feels like this is actually the most important thing because actually most people, but also institutions, that's the thing they think about. They don't think intrinsic. They don't sit down and think, well, the euro is slightly cheap compared to the dollar right now. They think okay, well, these are the main catalysts or events that are going to happen geopolitically or politically or economically, and then this is the position I'm trying to take. And so we decided to build this sort of financial markets that captures any of these questions, these types of events. And the thing that really got us excited is two things. One, if we managed to build this, and we could talk about all the challenges to build this, but we were very naive at the start, which I think is a good thing, but I think it would be the biggest financial market of all because it's the broadest of all. It can respond to most questions. It prices anything, not just equities or credit or whatever. And then two is actually really exciting because when you saw kind of in terms of the mission, the first one is vision. It's, I think, building the largest financial market on the planet. And the second one is the mission, which is there's this beautiful thing that would happen when people start trading, when you open a market for something, which is you go from the plane of subjective, emotional, climate change is real, you're the one who's dumb, climate change is 100% false, you're the one who's dumb, to climate change has a 40% chance of materializing in the next 10 years. And suddenly, people are actually, when money is on the line and there's a market around it, you get truth. You get objective, unbiased, unfiltered truth. And so I got really excited with the notion of using markets to get a little bit smarter about the future, to get a little bit more truth. And I think this is really where Kalshi came from.
That is amazing. And so when did you officially kick off, and who came up with the name? But when did you officially incorporate the company?
So 2019 is when we really started. The name, it was interesting. I like names with K. We're looking for a .com that was cheap. And Kalshi means everything in Arabic. So I grew up in Lebanon. So that was sort of the name. So we kind of found it. It was a few minutes process. And then, it was interesting because a lot of times, there's so many investors and others suggested that we should change the name over the years. And we tried multiple times, but we never really succeeded. It just stuck. And now it's a brand. It's very hard to pronounce for Americans. People like it. So we're going to
love it. Yeah, no, I think you should keep it. So You ended up going through YC. Had you tried to go raise capital outside of YC, or did you always know that you wanted to do YC?
It was part of like starting the company. So we were like kind of like thinking about the idea. It's kind of this jobs thing at Citadel, like all these different things going on. You know, one of our friends like, oh, like you should just like try applying to YC. We actually like go to this hackathon. They're like, oh, why not? Let's just go. And we went to this hackathon. And remember, like Michael Seibel, who's now on the board, you know, a few years later, but like he was there as a judge. So it was Michael Seibel, and actually there's a bunch of judges from YC, but our batch was judged by Michael and then Christina from Vanta. So that was the first time I met Christina. Christina is awesome. So they judged us, and then they were like, oh, it's like this idea is illegal. It doesn't make any sense, etc., etc. But then we actually proceed to winning the hackathon or being top 3 or something.
Oh.
And it gives you an interview or office hour or something. And then we apply to YC and we get in. And so it was kind of like a series of sort of events that led us to kind of go to YC. And then we're like, okay, well, YC, at the time, it was kind of really sort of the Harvard or MIT of startups. So we're like, oh, that's great. Like, we're very excited to get accepted. So we went through YC. But no, I wouldn't say it was a very intentional decision.
Got it. And did you go into this knowing that this is like going to be a massive regulatory headache? Because you guys could probably build and ship software and make money on it pretty quickly. But like with this type of offering, was it pretty obvious from the start to you, like how difficult that would be? And that'd be a big bulk of maybe the first couple of years?
So definitely the number one question about the company is legality, regulatory first. Like we knew that. There's no kind of hiding behind that. Like there was, you know, it's not allowed in the US. So that was the big elephant in the room.
Mm-hmm.
And it was for this industry. It's like first and foremost, the question was like, is this regulated? Like, is this legal? And if you do it in an illegal way, at some point you're going to get shut down or hurt, or a variety of other things are going to happen. But the business is not viable, basically. So that's one. I think we were naive about how hard it would be in a lot of major ways. And I think that was actually a very good thing. It's a little bit like when you're hiking, they tell you don't look at the summit, like just look at one step at a time. Because if you look at something, you get very tired.
Mm-hmm.
You can't make it. So it was one of those things, which is like being naive about all the stuff that we need to go through to get here was actually probably the reason why we actually succeeded and why incumbents have not historically. I just think they knew how ridiculous this sounded, whereas we did it. We were just asking very naive questions like, oh, why? But that has power. In and of itself, I think that's really, really powerful. So yeah, I would say underestimate the difficulty, but we were just pretty stubborn about making it happen.
In leaving YC, who ended up maybe leading that round? And did you have to convince a lot of folks? Like, did you get rejected in the early days? Or did you feel like once you were in YC, this became hey, either you're going to bet on us figuring this out or you're not?
It was interesting. Like, we didn't get any of the sort of early stage major funds to invest in the seed. Because we're a company, we're like a little bit of Black Swan in YC. Like, we were this very weird off company, didn't have a product yet, working this regulatory stuff, very unusual for YC. Everyone was like, oh, like KPIs on a daily, weekly basis, and we're growing and not growing, and these are the problems in office hours. Whereas us, we're like, I just flew to this random island to talk to some sort of regulator and see what we can do here. So it was like a very weird company. So I don't think we were very hot during the batch. We were not a very hot company. There were like way hotter companies raising it like, you know, easily. And we weren't. Now at Demo Day, I think we got hot that day. Like like my pitch was basically like, hey, I think there's 1% chance of me succeeding in the US in this regulatory thing. I think we can do it. Here's a plan. And if we do succeed, I think it's going to be big. And suddenly a bunch of investors got pretty excited about it. And it was like a mix of angels and funds, but none of the kind of top tier ones. Maybe part of the top tier didn't want to take the regulatory risk. Two is kind of like, you know, there's a number of things about it that like people are unsure about. I mean, you know, I talked to Michael a lot. He's like, oftentimes like, you know, the hottest companies at the batch don't end up doing that well. And some of the ones that like are kind of like, he said consistently being able to raise super fast at the batch, and I think Gary talks about this a lot as well, is not actually that correlated with long-term success. You know, I don't know what that's indicative of. I mean, it probably partially like maybe people are not that good at early stage investing as we would like to think. A lot of it, there's quite a bit of luck in it. Two, maybe like Demo Day is not a very good way to evaluate and measure founders.
Mm-hmm.
Because, and at this stage, that's pretty much like most of the equation. But then we raised right after Demo Day, and then really kind of when our first Neo came a little bit after.
I'm going to ask when Neo came in because they've been pretty vocal about supporting you guys.
So Neo was very early. I mean, Ali met us right after Demo Day. We didn't need money, but we then took his money because he was just so helpful and really great. It just made sense. Like, we really liked Neo, and so they came in pretty early and helped us a lot, like hire, etc., etc. And then now they've built up a very sizable position in the company over time. Yeah, so Ali I think did a phenomenal job. He came really kind of earlier out of sort of the big VCs. Sequoia came at the A, so Alfred led that round and ended up joining the board. And YC led the B, like the growth fund. But Neo, I would say, I mean, Sequoia, YC, and Neo are the largest shareholders out of the investor right now.
Yeah. And so it seems like you had launched in beta. I think even I was using it in the early days, but back in 2019, but you didn't end up launching until like early, just publicly until 2021. So is that largely the regulatory stuff? Did things have to happen there, or do you just want to be a little bit more quiet and in stealth?
Well, it took a very long time to launch the exchange. Like the regulatory piece is really difficult. Like we decided upfront, one, we believe frictional markets have the potential to become the next wave of financial markets and broadening financial markets so that really can capture all the long tail participation that's not captured by today's markets. And two, we strongly believe the financial markets have to be trusted, regulated, safe upfront. And consistently when it's not, just bad things happen and they don't end up sort of like really thriving. And so for us, it was like, well, we're going to have to address number two upfront. There's just no other way around it if you wanted to build something enduring and large over time. And it's a little bit like sort of a bit like Coinbase's approach to this space. I mean, we had to do a lot more regulation up front than Coinbase did. But in terms of the ethos, it was like safe, trust, regulation up front, because that's how you build loyalty and trust over time, not just in your company, but also in the asset, which both of us have a similar sort of, I would say, challenge that like, it's not like trading stocks. Hey, like I'm another broker to trade stocks and here's how I'm differentiated. It's more exciting. It's more novel. It's potentially much bigger. But then you have to do a lot more education and trust building with customers. And so we took the heavy pain and cost, like both in time, effort, resources, risk of, okay, we're going to regulate this. We're going to make it legal in the US upfront. And that took years, like 3 to 4 years really upfront of just fighting the regulatory fight up until we really could properly launch. And that was like 2 years ago. I would say, I don't know if it's like a stealth thing, but more like exchanges take a very long time to launch. And even when
there wasn't much to say yet until you guys were able to launch.
Yeah, and then even when you launch, you're given a shorter leash, and then over time the leash extends and you can accelerate, move faster. I really feel like 2024 was sort of the pivotal year for us when we really felt like, okay, we have all the like Kalshi has built a lot of foundation. It's one of those businesses that like, I think people are waking up to this now and they're seeing like, oh shit, like that's how much value has accrued and compounded in the company over time, because it's like this kind of like we're fully vertical. We just got our clearinghouse as well. Now we have an exchange and clearinghouse. So we're one of the 4 exchange clearinghouses in the US since Dodd-Frank. Like you can list any financial instrument and we own the whole thing end to end. We move from the money, dollars flowing kind of at the clearinghouse to kind of listing stuff and to the marketplace. So, and we're kind of the only tech first one. Like imagine, and just to give you some numbers, like the derivatives industry, people don't know this, but in terms of volume, like turnover, it's actually the largest on the planet. So CME alone does $250 billion of volume a year, so 1,000 trillions. And ICE, something similar. So those are 2 large companies in the space, and both are actually, so they're CME and ICE, Visa and MasterCard. They're the highest net profit margin companies are the Fortune 500. It's extremely profitable businesses. But this industry is like no tech. There's so much regulatory barriers that no one can actually go in and do anything meaningful. And we were willing to kind of take on that risk and that fight. But now that we're in, I think we just managed to accrue so much because we're the tech first company in a space that's just massive, and you can see kind of all the replica, like Brex and Ramp, like all Rippling, all these Deal, like all these companies that kind of went into all these other spaces that they sort of have tech but not really. No, we're talking about a space that like the main players are like Minneapolis Grain Exchange, which is like people were like exchanging tickets to each other on the grain floor elevator, like that type of thing. And it's a massive space, but just has not been touched by tech in any way, shape, or form. So the opportunity here is massive, and now we have sort of the setup to really capture it. And I think 2024 is we're starting to kind of really reap the fruits.
Were they investors that opened doors for you on the regulatory front to kind of expedite this, or were you kind of boots on the ground from the start, saying like, who can get me on a call with this person, who can get me a meeting here? Like, how did you navigate that maze?
No investors could help with this, and I don't think it's possible. Like, we have built, for a company our size and stage, we have built a surprisingly effective and large DC stronghold. We got it was just the number one thing to do as a company, and we got very, 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 very good at that game. Very good. And so we've been close to both administrations. We've been close to regulators. We've been close to Congress. We do think of it as like, like Figma and Dylan got very good at building products because that's kind of like really beautifully designed products, and that's really important to their business. Our core job to be done in the business is unlocking regulatory events, and we got really, really good at it. And that's one of those things. It's like, it's a bit like asking the question of like, were there any investors that helped you find product market fit? And usually the answer is like, no. It's like, you have to do it, and it's hard work. It's a good strategy. It's failing multiple times. It's repeating all of that, basically.
So I'm assuming, raised obviously a lot more capital kind of pre-launch or in and around there. So when was the Series A? Walk me through maybe the next round of funding after you raised from Neo.
So we raised Neo, and then we raised Series A. Before launch, we raised around 30 from Sequoia and Kravis and Schwab. Then we raised the B. So we raised in total like close to 110. Yeah, a lot of it like was kind of like around, because there's kind of launch stages. Like we launched the exchange and we have to like launch a bunch of the systems around it, etc. And I think a lot of investors kind of understood that like you have to price this company a little bit differently. The J curve with these types of exchanges is higher usually, even historically. But when they work really big. Like it's much harder to make them work, but if they work, it's just like everything just sort of flips. And it's amazing because we've seen that now happen with especially now in 2024, we started scaling, we got liquidity partnerships with SIG and so on. But like with the elections or when it all came together, we just finally like really got, I would say, we really felt now we have critical mass. And it's amazing. Like everything's flipped. Like all the positive compounding flywheels are happening. Like shareability is happening. Retention is up. The engagement, how much monthly average traded, like how much people trade per month is up. And then all the economics of the business is just like flipped insanely positive. Like everything is just working. And you start
this year.
Yeah, like literally, I mean, as of this year, and then even like, I would say like last 2 months since the election, because we got critical mass. And we get critical mass with exchanges, like everything flipped from very hard to sort of like, kind of the drag becomes very positive.
Yeah. Were you intentionally going out for each of these, or did you get preempted? Because you're essentially doing a number of things. So it was less about, hey, let's acquire as many customers as possible up until this year, but let's just keep building the foundation of this business. So were you intentionally going out and saying, we need 30 more million to hire A, B, and C, or was it a combination of both?
Neo was like kind of preempted. Series A was preempted. Sorry, not preempted. We did a process for the Series A, and then Series B was preempted. Yeah, I say the A was like, okay, well now we're ready to kind of start, like to launch and all these different things. So like we should just like raise this, scale the operations and so on and so forth. B was preempted. It was just like, hey, like this is a, good amount of dilution for this amount of money. In a financial services company, it's good to have a higher balance sheet. So we raised it. That was really the thinking.
I want to jump to this year. Obviously, I know this is like a little off the beaten path from raising actual capital. I'm assuming you have a lot of VCs in your inbox now since the election. But I would love to know more. So obviously, I think it was October 24th was a big day for you. Walk us through what happened from a regulatory perspective and the last 2 months, if you don't mind giving a high level of like where things sort of catapulted.
So we got regulated first when we first legalized prediction markets. Then we kind of started growing, etc. There was one market that we didn't get approved. And the regulators historically just also very taboo is election markets, trading on the outcome of the election, like you would trade a stock or interest rates or anything else. We believe that it should be because election is such an important event. Argue it's even more important than interest rates or stocks or S&P, that you should be able to get exposure to it in a very, in a very light touch or like very kind of accessible and direct manner. The other thing we're really excited about this is like, or maybe two other things. Like one, it's massive, just humongous, I think, and we could basically take the whole market. And then two, it'd be very useful because like polling accuracy has been going down. Mm-hmm. And by the way, it's true for all of our markets. Like this is the beauty of prediction markets, like they forecast the future. And I think forecasting the future of an election is super important. And, we saw the results. Obviously, everybody saw the result now. We were right, and a lot of the other methods were not. That doesn't mean we're a crystal ball, but we're closer to a crystal ball than all these other methods. We fought very hard for it. The government disapproved it. It was like a long, pretty much 3-year-long fight for this. And then we decided to sue the government. It was a huge decision because from a pattern perspective, we talked to the board and like, it's just like, well, from a pattern perspective, it just feels like a horrible idea. Like people don't do, startup at this stage doesn't usually sue any government or anyone. And then two is like any company at any stage doesn't sue their own regulator. That's just like a bad idea. We had very strong conviction. Same with like, it's like, well, we were right on the law and we really had conviction on it. And it's really hard because it's one of those things where like when you sue a regulator, the balance is very tilted in favor of the regulator. Like you cannot win the soccer game 1-0. You have to win 3-0 or 4-0 to win. 1-0 is considered a loss. You end up losing. So we decided to sue regardless. And because we had a lot of conviction and maybe just we had a lot of balls. Like I know we're like, fuck it. Like, we believe this is right and we're just going to go for it. And we like these asymmetric long shots. We just like them. I think they create a lot of value. And we're just like, I'm just thinking now, like, weirdly, actually, I think if you look at a lot of the biggest companies that were built, a lot of the stuff that actually built them, looking forward, were anti-patterns. They were not patterns. And I think we see pattern match a lot these days. Mm-hmm. It's a lot of how and I think it's a safe way to invest. Like, yes, invest in a B2B SaaS, so you're going to get a good multiple, but you're not going to be the next Don Valentine doing that. I just really believe you're not. Like, you're not going to find the next Jensen like that. It has to be a pattern interrupt. It has to be a weird thing that feels extremely off at the time. You have to go back to first principles and why it might work. It probably won't, but it might work based on first principles. And the founder is kind of like a little bit off, like they're crazy enough to potentially get it done. And I didn't know this in retrospect, but I do think like Luana and I are a little bit off as founders. Like a lot of stuff didn't make sense when we were doing it at the time, but it worked because we had conviction. So we sued. It was a bloody battle. And people are tweeting now. It's funny, like a lot of people are tweeting about sort of the government overreach and all the stuff that's happened to them. Like Kalshi has endured the most severe form of government overreach. We have truly been harassed. And at some point, maybe I'll write about it and do a tweet thread on it.
You should.
I think that's somewhere, but really like the most egregious forms like of retaliation, death by 1,000 paper cuts, all sorts of like, Mark Reduce was talking about jawboning. We literally, dealt with jawboning. Everyone company knows the term jawboning. There's nothing new about it. We've dealt with all this stuff, especially since the lawsuit. And then we won. And we won against all odds because the appointee, the judge that ruled in our favor at the district court was a Biden appointee, and the 3 judges that ruled in our favor at the appeals court were actually also the most liberal Democrats on the DC Circuit of Appeal panel, which is the most liberal panel in the U.S. This is the one that comes right before the Supreme Court. Once we won, the meaning of this is like now we legalize election markets, but also a broader set of markets. We define what's the difference between a financial instrument and gambling in a very kind of clear sense now. And the election markets became legal for the first time in the U.S. in 100 years. So they were made illegal in the Great Depression, and we made it legal again. And they were regulated for the first time in history. So it's the first time it's actually in a regulated market. And since then, kind of things went parabolic. Like I think about the most egregious form of product market fit or curve. Like it was, we've done like something like 100x overnight.
Yeah. So from there, I think you took the Twitter and said, hey, it's go time. I saw like all the tweets, at least from my perspective. Maybe you were using other channels to say like, hey, everyone, you should know us. Because I'm assuming you were acquiring net new customers. They weren't existing. They just started like betting. These are net new, customers that are like trying to create accounts, trying to fund accounts. I think there were even some issues where people couldn't create it. I think even my husband was like, I'm trying to create an account and fund it, and I can't do it. This is the night of the election. So walk through how you got the word out and it just exploded.
One is a lot of demand. So people just wanted this. And so like now you have a legal way of doing it. So it's like, oh shit, like we can finally do this. Number 2, I think we had a very effective marketing strategy. And I think the way we ran it is like, people have all sorts of views about marketing and they give founders a lot of advice. I was one of the founders that took a lot of advice on marketing. And now I feel very strongly like you just really have to like not take any advice when it comes to marketing, frankly. A little bit like also not take advice finding a great product. Like you just have to have a little bit of like I really believe it now. Like I think like basically like don't use fucking agencies. Try to limit advisors. In marketing is about 2 things. It's like 1, just having creative ideas. And the best way to kind of know if an idea is good or not, it's actually very simple, but most people don't do it, is actually like, do you think it's actually kind of sick yourself? And do you think that you and your friends would find it sick? And if the answer to that is yes, it's very hard to actually go wrong. Mm-hmm. And it's also very easy to avoid, feel like your users feeling like they're being marketed to, because you're not actually marketing. You're just building something sick. Like you're just doing something sick, and then you see what happens. And then 2 is just sheer hard work. Just fucking do it. Like just do, see what happens, etc. And this is what we've done. We did this for a month. It was extremely effective. A lot of it was just like great ideas that we had. Like one is like, well, what is kind of something very useful that people would really care about? It's like, well, what if you had live odds plastered in billboards all over the country? We literally built that. Like we literally piped an API to all, a shit ton of dynamic billboards in all major cities and sometimes non-major cities across the country. And they went absolutely viral. I don't know if you saw some of them, but like, yeah, they were like everywhere. And like it was hard to build. It took a lot of time. It requires a lot of small details to kind of be tweaked, etc. But like it worked because I thought it was sick. Everyone around me thought it was sick. And then, it's super simple. If you think it's sick, a lot of people at least a decent portion of people are going to think it's pretty sick and they're going to share it. We did have a lot of issues in the product for 2 reasons. And that was brutal, but that is what it is. So we were using an old, a third-party clearinghouse. So we have the exchange. We had another that was plugged into another clearinghouse. The day where we got approval or we won the lawsuit, the old school clearinghouse did something really unfair and really unfortunate. They said that they're not listing the election market. That was brutal. And it was very, very disappointing. Talked to the board, etc. Now, we were lucky because we actually had been working for 3 years on another clearinghouse, our own. So that's what I mentioned. So we actually got approval for our clearinghouse, which is actually the biggest thing that happened that month. It's bigger than the election, because now we own the fully vertically activated thing. So we had a decision where like we couldn't transition the whole thing in time. So we had to basically create a new version of Kalshi over a weekend, like literally an entirely new one, think copy-paste the exchange and launch it on the new clearinghouse to launch the election. So we had the election on a new environment, an entirely new Kalshi, where users have to create a new account, and now we have multiple stages of like where people can be in KYC. So it created a lot of bugs. We had to do it. We had no other way. We had a gun to our head and we had to do what we needed to do. It was really brutal, and it took us a very long time to debug the issues out of that. And by the time we got to debugging the issues, we got so much demand for deposits that we actually hit regulatory reserves, which we were ready for. So we took a personal loan from some of our investors, but then we had to turn off deposits on election night, which was we took a tenth of the deposits that we could have taken. So that market was actually 10x bigger.
I was stuck to, that's amazing. Last thing, any advice for founders in bringing this back, whether it's like just raising money, keeping their head down, any last words of wisdom?
Well, it depends on kind of like what stage. I mean, I think
maybe getting off the ground and trying to build something that's different, to your point, like the anti-pattern type of business. Yeah. Where, like, no one believes in it and you're like, this is different,
I'd just say like maybe one thing at a high level, like I think becoming a founder has become a little bit of a career now. It's a good and bad thing in certain ways. It's good because there's more founders, and I think that's generally a good thing. It's bad because I think people are not quite grasping what it takes, and then you kind of up for a lot of disappointment. It's just hard. I think people are underappreciating how hard it is, mostly because they can raise a lot of money. Right. And I think the reality is raising money is truly not the way companies are built. It's really not correlated with building a great company. And raising money actually allows you to build a company for now 5 years, a decade, without actually understanding that you're not actually making real progress towards building a very meaningful company. And all this to say is basically like, it's much harder to build a company than people think. Much, much, much harder. It takes a lot more risk, a lot more guts, a lot more pain and suffering than people think. I wish more people told me that up front, because then I would know, like, if you know something is really, really hard, you treated it as very hard. You know what I mean? Like, you don't try to do 60 pull-ups in, I don't know, like in a day by eating a burger right before, right? Like, it's really, really difficult, so you don't eat the burger. Whereas I feel like a lot of founders are eating the burger before starting a company or while starting a company. Mm-hmm. And then it takes them a few years to realize, like, oh shit, actually I have to just sacrifice and work a shit ton and do all these different things. Maybe that's what I would have hoped people told me earlier.
Yeah. I love that. You're amazing. Thank you so much. This was fantastic.
Thanks so much for having me, Nicole.
Earlier this year, I was in a pinch. I was hiring my first full-time hire and didn't have payroll set up. I posted a quick message on X asking for the best company to help me get up and running, and everyone quickly recommended Warp. Within a few hours, I was up and running with payroll and benefits and able to onboard my team. Warp is one of the few platforms that allows you to offer healthcare with a minimum of 2 employees. It has coverage across 50 states, manages all state tax compliance, offers health and 401k benefits, and with no strings attached. For a limited time, get a free AirPods 4 when you click the link below in the show notes to learn more about Warp. It's difficult to find the right banking partner. I was very fortunate to find Stifel Bank. Stifel's venture banking team is your trusted partner for a full range of banking solutions for both venture-backed companies and venture funds. Stifel Venture Banking supports seed through late-stage companies, providing solutions for treasury management, strategic lending, and tailored banking offerings. Check out stifelventurebanking.com to see how they can help you reach new heights. Stifel Venture Banking is a division of Stifel Bank, member FDIC. You can find the link below in show notes.